is the Reserve Bank going too hard?
Look, they're playing with fire, I think, now. That February hike and the hawkishness, and a probable hike next week. Let's cut to the chase.
Yep.
They're probably going to go in next week. It's priced into the market.
Totally
They're going to go
priced.
25. So
They've got it trapped in the system, and they're not going to let it go.
They can't shock the market by holding. No, that's done.
Let's see how we go.
Let's start go through this quite quickly because we have discussed it. So the GDP number, which just came out, 0.5% for the December quarter, we're neutral. We don't have to hike anymore because the economy's overheating. We don't have to cut yet. It's sort of like the Goldilocks number. Inflation, look, even though there's evidence it's turning down, is still too high.
Yep.
So if inflation was your sole purpose, it's on the tightening side of the checklist.
But going in the right direction.
Starting to go in the right direction. I think we'll probably need another couple of months and seeing what's happening globally before we move that one to neutral.
And we need to see what the adjustments are too, because
Correct.
these new monthly numbers are not perfect.
They're not perfect. They only capture about 2/3 things. And this is the thing that the Bureau of Stats put out, just by the way, without going into the entrails of the CPI and how inflation's calculated, about 1/3 of all prices in there only change once a year. Like school fees, it only changes once a year, and then they're steady for the rest of the year. So there's a few quirks in those numbers, in the monthly numbers. So
which is why things need to be adjusted.
Which is why they're saying it's an experimental indicator. Okay, the labour market. Look, I'm going to move that between tightening and neutral. Wages are picking up. The unemployment rate at 3.7% has increased, but it's still relatively low. So it's sort of bordering on, wages, unemployment, sort of not quite neutral yet.
But again, go in the right direction.
Yes. A couple of months ago, this was in the tightening column when unemployment was 3.4. Yep. So that's moving right. Wages, speak of the devil. I'm going to say they're neutral. That number that came out, 3.3, it's nowhere near being the inflation driving wage increase that you'd fear to see. International economy, I'm going to look on growth. I'd put it in easing, but on inflation, I'll put it in neutral because inflation, as we're saying, is a little bit more stubborn than we were thinking a couple of months ago. House prices, I'm going to put that in neutral too. I don't think they'd cut because we've had house prices peak to trough currently at 9.1, I think, according to the CoreLogic numbers, which came out earlier today too. So they're after that boom, -9, no, they wouldn't ease. Do they need to hike because of house prices? Well, no, not while they're doing that anyway. So that's in the neutral column. Retail sales, I'm going to move that to the edge of easing. That consumer thing we were talking about. Retail sales in the December quarter were negative in volume terms. We had a little bit of a bounce in January, but it's after a -4 in December. We had 1.9.
But we had a good November.
We had a good November.
A bit of a sort of
there's a quirk in all of them.
Behavioural change because of Black Friday, etc.
All that stuff.
Yeah.
But I'll put it in neutral to slightly easing. And all the retails, and good old Harvey Norman came out yesterday with a poor profit. Their share price got smacked 10%. And if Harvey Norman aren't selling TVs, videos and beds and these things, their share price fell 10%. Wow. JB Hi-Fi's down. The what do we call it? Discretionary spending is the one where it's being hit. So I'd put the retail sales in that. Consumer sentiment, well, that's definitely in the easing column.
Yeah, down.
We consumers are gloomy as can be. Building approvals, we want to build more houses because of this high demand from immigration. I'd put that more towards the easing side. We want to build more, and the interest rates are a impediment to developers building apartments. You know that better than anybody.
Yep.
So I'd put that in easing.
But I might just make one comment on that. But the problem is if we don't get enough building approvals, rentals go up, which then affects inflation.
Oh, and the rent, correct.
And housing rental is a component of one of the 91 inputs into inflation. So so it's a problem,
And rent is the rental market now is arguably a bigger problem than the house price.
Well, it is in the US too, by the way.
Yes.
It's a big driver of inflation in the US, and they keep talking about it.
So we need to build more houses, particularly if we've got, all this immigration coming, we need to build more. Business investment, that's a good number. It came out the other day. I'll put that in neutral.
I was surprised, but anyway.
Yeah, businesses are investing. There was an increase in the December quarter.
Is that mining or non-mining? So
non-mining is actually doing well.
Yeah, because
what I reckon was happening during the COVID lockdowns, a lot of companies shelved. They had their ideas.
Yep.
They shelved a lot of them. You can't do it. We're not sure where the economy is going. Now that we've got through the COVID lockdowns, they're saying, actually, our IT systems need to have more money spent on them. A lot of it's that sort of CapEx that's occurring. So, but it's a good story. You don't want to hike to kill it off. You don't need to ease because it's not bad. So that's in the neutral column. Business confidence, same. The NAB survey's got businesses' confidence coming down a bit, but businesses are way more optimistic than consumers. I'll put that in neutral. Commodity prices, gosh, I'm going to be putting a few more on the neutral. They've come off a bit. They're suggesting that some of the headline inflation numbers will start to come down. You know, the oil price is $80 a barrel, was 120. Good for inflation, but it's not calamitous. You know, iron ore is still strong. We're saying that about the federal budget. You know, Treasurer Jim Chalmers must be doing a little jig in his office when he sees the commodity prices. You know, he's getting lots of tax revenue from.
Yeah, because the Fortescues of the world are paying a fortune.
They're paying a truckload. Woodside came out yesterday, I think, and they're paying. I think their half-yearly payment, I have to just check this, was over $2 billion in tax.
Yeah.
Thank you. Anyway, stock market, it's weakening, but because of sort of the bond yield sell-off, I'll put that in neutral. Look, the RBA wouldn't necessarily cut because the stock market, it has to tank for them to really have that as an indicator for them.
GFC style.
And the current rates, I'm going to put that easing, well, in between neutral and easing. Rates are currently mildly restrictive. They're not easy. The 3.35 cash rate we've got today is impacting. Rate hike next week, 3.6%. They don't need to hike anymore. It doesn't say they have to ease, but it's as an indicator of pressures on future interest rate settings. They don't need to hike much more.
Given that, you and I have agreed that there's going to be a 25 basis points because they backed themselves in a bit of a corner on that one.
Yes.
But what would you say for the future? Do you say, given all this, unless something changes on the board, where do you reckon it's going to go?
I reckon they hike in March next week at the board meeting to 3.6. And I think despite their more hawkish rhetoric of a month ago, the facts will tell them to hold tight in April and May.
Wait and see.
Wait and see.